Thanks for joining us. I'm Marlon Bowling with you as we keep an eye on your ag commodity trade. I believe we might have a couple planting tweets to share with you here. Of course, we've been following that hashtag plant 18 or plant 2018. Right here, Cliff Weir checks in. Chickpeas won't grow in the bag, he says. Obviously, he's out there working hard out in the field, trying to get these put in. He says seems to be working well. And also, Tim Shepard checks in, and he posts a sign here, first signs of wheat poking through this morning, sown on the 5th of the month. Now, he says July 5th. I think he means May 7th here, if you invert those numbers. So that would be May 7th at, looks like about 18.5 millimeters, they call it. So anyway, plant 18, we're tracking those. And thanks for sharing all those for the new planting season here this year. Interesting, all the different aspects that we have to share with everybody, all the different crops involved all across North America here. Good stuff. All right, Brian Hoops is standing by, and he is with Midwest Market Solutions in Springfield, Missouri. And we're going to talk about this market action here this morning. A lot of strength in the grain complex today here, Brian. What's at work?
Yeah, a lot of things going on here. Switch in the forecast. The 6 to 10 day came out last night with a much hotter and drier scenario than what was advertised going through the weekend. And that's really going to affect the hard red wheat crop in Kansas, Oklahoma, Nebraska. That crop's trying to head out and mature. And so you don't want a hot and dry scenario that we're going to see, very warm temperatures and some wind. That's going to hurt the yield on the crop. And you can see the market's putting in a lot of premium as a result. So we are seeing pretty big gains in the winter wheat, Minneapolis wheat, the spring wheat contract following along kind of for the ride here. So wheat desires much cooler temperatures and some rain, light rain for maximum yield. And I don't think we're going to see that with this wheat crop.
You know, I was reading a wire story this morning where some Russian analysts had actually reduced their expected production by about 5 to 10 million tons here this year on their grain production. Maybe not ideal conditions after all, where the Russian harvest is coming in. Right.
You know, you can point to huge worldwide supplies of wheat, which we do have, but it doesn't look like we're going to see that much added to it this year because there is crop problems in the United States. The Black Sea region, which would include Russia, is suffering for some drought-like conditions. Australia, Argentina, all these areas that are big wheat producers are experiencing drier than normal growing conditions, which will limit the upside for potential wheat yields. Yields are going to be affected, and we're going to see a drawdown in world wheat stocks.
Let's dive into the prices. We'll start with the corn and see how July corn is faring at the moment. Right now in Chicago, July is up 3 1/4. We're still trading at 406. December new crop corn 3 1/4 higher now at 424 1/4. Soybean market today on the July contract. Of course, soybean planting way ahead of schedule now, believe it or not. And July soybeans are gaining 5 cents. We're priced at 10.30 1/2 per bushel. We have November up 4 3/4. We're now trading at 10.38 1/2 per bushel. In the wheat market that we were talking about in Chicago, July still hanging right in there at 524 3/4. That's 17 1/2 cents higher. In Kansas City wheat here with the harvest underway in central Texas, we have the hard red winter wheat on July now trading 19 1/4 higher at 545 3/4, well off of our earlier low by 23 cents. And looking now at our Minneapolis wheat trade on the spring wheat market, we have the July contract gaining 15 1/4 cents right now. It's trading at 637 per bushel. On the cotton market, we currently have the July contract after getting within just a stone's throw of 90 cents. We are now trading at 87.21, still up 66 points on the day. We have December up 103 points, and we are trading at 83.46 right now. We'll come back in a moment, and we'll talk more with Brian Hoops, this time about livestock, maybe some of the outside markets too, right after this. Let's go back to our conversation with Brian Hoops, and I want to dive into our live cattle trade here and take a look at our current prices. Interesting trade here in the cattle market where we started out higher and within just mere moments turned around and went lower on the day and sold off fairly sharply for a little bit, and now we're just back to almost even on the day. June live cattle are trading 7 lower at 104.85. August down 17 at $100. and 45 cents. October now 8 higher at 103.80. So a mixed affair going on in the cattle market right now. Let's take a look at our feeder cattle trade. And right now on the feeders, similar action. We have May down 2 pennies at 133.90, August down 12, and it's trading at 140.38. September feeders dropping 15 cents right now at 140.53, but it did get as high on the open as 141.10 on both the August and September. So I don't know if you can take much away from this, Brian, when you see a softer tone here in the cattle market, but really just kind of flat on the day.
Yeah, real kind of a choppy two-sided trade in the cattle market. You know, cold storage coming out this afternoon. It's definitely weighing on the hogs as we could see a big increase in pork stocks, but the beef stocks may be down just a little bit because that's kind of been the trend the last couple cold storage reports, and that's provided support to the cattle market. Weighing on things is a big increase in show lists compared to like a year ago. We're looking at 30,000 head more on the show list numbers. Last week's kill was the largest weekly slaughter since 2011. So the big wall of cattle that a lot of the trade has been talking about looks like it's coming at us right about this time frame. So there'll be plenty of supplies of cattle over the next several weeks, and that's likely to keep lids on any rally attempts.
Do you think the trade is flattening out ahead of the cattle on feed report coming out Friday?
Yeah, that report coming out Friday as well, we may get some positioning ahead of it. You know, the trade's really bracing itself to see if we're going to see more expansion in the cattle industry. And so, you know, you're probably going to be limited as far as any trade activity going into that report.
So let's look at the lean hogs here. And on the lean hog futures, we currently have June down 62. We're at 73.38 per hundredweight. July down 80 at 76.05. August 95 lower at 75.10. And Brian, you alluded to the fact that you thought maybe a lot of the weakness might be related to fears of the upcoming cold storage report this afternoon.
Yeah, we would expect we'll see an increase in pork stocks. That's what's happened over the last couple reports, and I think the trade is anticipating we're going to see another increase in pork stocks in this afternoon's report once it's released.
Okay, now the cattle on feed report, I did want to point out before I let everybody go here on this segment, the cattle on feed report that comes out Friday, normally they come out at 3 p.m. Eastern time, but not this time. It's going to come out when they normally release their crop production reports. It'll be during the trading session. It'll come out at noon Eastern time and 11 o'clock Central time, and that is for the benefit of allowing a little bit of trade to take place after the report is released, because it's a long 3-day holiday weekend with Memorial Day coming up next Monday when the markets are closed. Brian, thanks for all the information. Good to visit with you, sir. Appreciate it, and we'll talk with you again soon. Brian Hoops, he's with Midwest Market Solutions in Springfield, Missouri.